Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. I'm Austin Wilson, co-portfolio manager at Hixon Zuercher Capital Management.
And I'm Josh Robb, Director of Wealth Management at Hixon Zuercher Capital Management. Austin, how can people help us with our podcast?
Subscribe if you're not subscribed already. That way you get new episodes when they drop on Thursdays, and leave us a review wherever you're listening to us. It helps us to help more people. And always remember, maybe you have questions about your financial situation, just want help, want guidance, need someone to walk alongside you on your financial journey. Check out our website, check out the Invest With Us tab. We may be a good fit. All right. So today, Josh.
Yes.
We're going to be talking about, I don't know if you know this.
What?
In November of 2024,
Okay.
there will be a presidential election in the United States.
That's coming up, huh?
And I did have a bold prediction in our
Ooh, yes,
2024
that's
predictions episode.
That'd be the oldest.
That was one. But that there would be a presidential election.
Oh, nice. So you're almost there.
Well, I've lost a few years in a row, so I wanted some gimmies.
There you go.
So that was my gimme. So let's talk about today
Yes.
the implications of investing in an election year.
Okay.
Because I feel like this is a topic that people have very strong opinions on.
Yep.
Politics in general, people have very strong
Yep.
opinions on. And a lot of times I feel like it clouds people's judgment. So
Yeah. If you want an exciting Thanksgiving dinner, drop some politics in there and just watch what happens.
So this is going to be a nonpartisan look
Okay.
at investing in an election year. So let's look at some stats first.
Yes.
I love numbers. So let's go back 70 years. Now
Okay.
we're looking through the end of 2023. So that's
All
back
right.
70 years, which would have been 1953.
All right.
That's a long time.
Mhm.
So this is going to be a good long-term
Okay.
way to think about this.
Yep.
Suppose I give you, Josh Robb, $1,000 and you were alive in 1953.
Yep.
And you put that $1,000 and invested it when only Republicans were president for that
Okay.
entire 70 years.
So from 1953 to 2023,
Correct.
I would take my money and put it in the stock market.
Yep.
Only in the 4 years or whatever time period a Republican is in office.
But you'd
And
be
if they
cast
don't, I
otherwise.
would take it out.
Correct.
Okay.
So how much in dollars do
Yep.
you think that $1,000 grew to?
Yeah.
Because we're assuming it grew.
It grew.
70 years.
Okay. I'm going to let you tell me.
Okay. It's a lot.
It's a lot.
So it multiplied by 27 times. So that
Okay.
$1,000 turned into
Okay. Nice.
$27,400.
Yeah. Good return.
So that seems great. So
Yep.
over 70 years, 27x if you were only invested when a Republican was
Mhm.
president. Now, take the other side of a coin.
Okay.
Suppose you put your money to work 1953, 70 years ago, only when a Democrat was president for
Okay.
that same 70 years. So
Yep.
in the other years, you were holding cash.
Okay.
What would that money have turned into? $1,000?
Well, you would think it may be close to the same amount.
Maybe. But actually, it's a little bit different. So that would have turned into $52,100.
That's a lot.
Now, that's almost double, but I would put the caveat
Yep.
that a lot of that actually can be attributed to the fact that there have been more years
The
when
Democrats
a
in
Democrat
office.
was a president.
Yep. So it's not apples to apples. It's not split
necessarily
evenly.
apples to apples.
Okay.
But the point is,
Yep.
it still would have grown 52x.
That's
Still
great.
More, but still pretty solid.
Yep.
But here's the kicker, Josh.
So that's not the lesson learned.
The lesson is not that Democrats have given better stock market performance, because that's actually pretty negligible.
Mhm.
But the kicker is that what would that $1,000 have turned into had you just left it alone?
All right. Just
And the answer-
invested the whole
Just did your
time.
$1,000,
27 plus 52, $80,000.
Ooh, let's take into consideration
Mhm.
the effect of compounding.
Ooh.
The eighth wonder of the world, according
Yes.
to Albert Einstein, unsupported and unproven by anyone. That $1,000 would have not turned into 27 or $52,000,
Or even $80,000.
or even 80. It would have turned into $1.43 million.
That's hard to comprehend.
And that's the power of compounding. So one thing that's key when we're understanding this way of thinking is that compounding, and to earn the effects of
Mhm.
compound interest, which is a wonderful thing, you need to be in the market to have it. And if you're not being in the market for part of those times, you're not going to be able to capture the full part of compound interest there. So you got to stay in the market even when you don't like who's in charge, right?
Yep.
All right, let's talk about this another way. So suppose this time we had $10,000.
Mhm.
That's a nice chunk of change. And we invested that $10,000 at the start of every single election year going back to 1936.
Okay.
And then we looked at what that turned into 10 years later. So the 10-year forward return, putting that at work. What we have learned through this study, and there was a great graphic from Capital Group, but what we learned is that the returns between the two parties at the point of the election and those 10-year forward returns were actually very similar. They were around 11%, 10.5% to 11.2% or so. So pretty much the same return no matter who got elected. But what we know is that a couple cool things happened. Number one, you made money in all but one 10-year period following an election year.
Despite all of the things that happened from 1936 to now, wars, famines, droughts, oil crisis, high inflation, low inflation, all that stuff, COVID. Yeah, just crazy.
So you made money in all but one. And that one, you were only down about 10% in that one. And that included the dot-com bubble and the global financial crisis.
And 9/11.
And 9/11. So that is really, really incredible. I think that also just points out that it doesn't necessarily matter, right?
Mm-hmm. Right.
You're going to have, the market is going to give you market returns over time.
Yep.
But you got to be in the market, as we talked about, to get those returns. Now, another thing to be thinking about and just keeping our mind on, even though we do not believe it necessarily impacts the markets, and historically has not, so it likely will not, is where the odds are for today's election.
Yep.
Right? So we tend to look at things like election betting odds rather than things like polls. Polls can be very, very skewed, very inaccurate, wildly inaccurate, one way or the other. And depending on where you get it from, even more so. Now, we look at election betting odds, which is people putting their money where their vote's likely going to be. And those things swing very crazily between the couple years leading up to an election all the way to the election. And what we have seen is that Republicans hold a slight edge currently for the 2024 election in getting the party as the elected party. And former President Trump has a pretty good odd at this point, but those have swung very big in the past. But a pretty good lead in terms of actually winning the election, in terms of what people believe with their dollars is going to happen. And that's historically been pretty accurate over time. So those were the numbers, Josh. What do you think about those numbers?
I tell you what, I love the fact that it shows you the apolitical nature of the market.
Yeah.
The stock market does not care who is in office, like you showed all those different stats. It really is, because it's comprised of individual companies, and we're going to talk about that, but people's emotions are the driving force. We've talked about this in all of our different investing podcasts, is people react and invest based on emotion, which is not the way to invest.
Correct.
And politics is a way of bringing out emotion. And while there are strong reasons why you should vote for certain candidates and where you lean politically, that's great. Investing should not be one of those motivating factors.
Right.
The market will and has always continued to grow, innovate, and invest regardless of who's in office.
Absolutely.
So,
and we're going to talk about that in a
we
little
will.
bit. But you have a special
I do.
something for us this week.
I do. So I have a quote from a former president that I thought was interesting.
So we're not having a dad joke.
No dad joke. Dad quote of the week. So Chester A. Arthur, president, had a quote.
He was a dad.
He had just won the election, and they asked him how he was able to do that. And this is his quote. And it just sums up to me sometimes just the frustration level maybe of politics.
Oh, yeah.
He said, "If it were not for the reporters, I would tell you the truth," which is just interesting to me. And Theodore Roosevelt, also another president, said when he was talking about the Senate, whenever they do roll call, the senators don't know if they should say not guilty or present, which again, these are years ago, right?
Oh, yeah.
Same problems, same politics, same thing. So just a reminder that there's always been division and animosity and all that fun stuff between parties, between politicians and reporters, between everybody. And it is what it is. So, dad quote from two different presidents.
Dad quotes of the week.
Yep.
All right. We talked a little bit about the numbers, talked a little bit about the statistics, but let's just dig into a little bit and have a nice discussion about why it just doesn't matter. So, as we pointed out, historically speaking, market performance is not significantly correlated to the political party in power, whether that be president, whether that be Senate or House of Representatives. So, what we've learned is if we let our political beliefs guide our investment decisions, that's not really aligned with the evidence historically, right? So, what do the markets actually focus on?
Right.
Earnings. They focus on fundamentals.
Yeah.
And you hit on this a little bit, but companies are fantastic at growing earnings, growing revenue over time, and stocks move higher because of that. They don't move higher because of what's happening in Washington.
Yep.
They move higher because companies are better at making more money.
Yep.
And that's all companies are really there to do. They're designed and their obligation is to you, the shareholder, to earn more money over time.
Yep.
And that's what they do. They
And
do it in good times. They fix things in bad times, and they do it even better.
Yep. And just look at any company that's been around for 20, 30, 40, 50 years, right? You have companies that have been around for 100 years, but they are in a different environment now than when they started. And they change and adapt what they do, what they make, how they make it, to make money. Like, that's the whole point. And so you're right, is that they don't care about who's in office. They do care about tax regulations. They care about policies, all that stuff, but they adapt to it.
Yep.
Because a lot of these companies have been around in high tax environments, low tax environments, new regulations, old regulations. They still make money.
They do.
So you're right. That's businesses really do not care.
And here's something that I think more people need to get their mind around.
Mhm.
Presidents. Very important world leaders, right?
Yep.
They are arguably some of the most influential people in the entire world. They have very limited control on the economy. They don't write laws.
Nope.
The House and the Senate write laws, so they will ratify it.
Yeah, or veto it or whatever.
veto it. They can go one way or the other, but they do not write the laws.
Right.
They do not set the dictation of where the economy goes from a fiscal standpoint.
Right.
Or from a monetary standpoint.
Yeah, they don't control the purse.
They even have less control over the markets.
Yes.
They have no control over what the markets do.
No.
So thinking that presidents have any influence over the economy of the markets really is a little short-sighted.
Yes. I agree. And we tend to, and we do this outside of politics, but assign impact or influence on people more so than they really have. And I think presidents are one of those where you're right, leader of the free world, a lot of influence, but the economy is one thing, but we're talking markets. The markets are comprised of a bunch of individual companies who really can't be influenced.
They have no control over companies.
So you're right. It's keeping that in mind is key.
So another thought is that political beliefs, we talked about how you can have strong emotions. It makes people get, fired up in a lot of different ways. But what this sometimes can do is cloud judgment when you're making your investment decisions, which would be, investing aligning with your political beliefs or not investing. That would be one example of that. So those are impulsive actions that can really hurt your long-term plan. So don't do that. That's what we're saying. But another interesting study that actually came out, this is from JP Morgan, they said that through their research, they found that people's feelings about the economy were strongly correlated to their political beliefs. So, for example, if you were to lean more liberal, and the president at the current time was liberal, Democrat. So currently, President Biden, president. You probably have a higher belief in how the economy is doing than someone who's more conservative because their party is not in the White House.
Yep.
The truth of the matter is that it's actually a lot less correlated to that
right.
in actuality. So the other would have also been true. So when Trump was president, if you leaned conservative, you would have been more apt to think the economy is doing well than if you leaned liberal.
Yep.
So the truth is that the economy swings a lot less big than people think it does, and it's a lot more smooth of a ride. But our political beliefs give us bias in how we're perceiving what's happening in the economy at any given time. So that's just a word of caution to not let those necessarily determine how you feel. Don't let your beliefs determine how you feel. Let what's actually happening in the economy determine how you feel. And it's pretty darn good as of right now.
That's right. And, I think of sports, right? If you're rooting for a team, you're more likely to look past their shortcomings and highlight their positive attributes, right? Same is true with politics, is you kind of gloss over the downsides and say, look how great things are going. And it's just normal bias, right? It's just how we are as human beings. So if you can acknowledge and recognize that bias, it can help you avoid making that mistake or that emotional decision based on your feelings on how things are going versus how they actually are.
Absolutely. Another thing to consider is that investments are influenced by things outside the U.S. too. So if we're thinking that the U.S. election and U.S. politics are really all that's impacting our markets and our economy, first of all, we've just decided that historically is not the case. But there's also a bigger world. Like the U.S. is the largest economy in the world and the largest markets in the world as well. However, there's a lot of things going on around the world that have an impact on what's going on in the economy and the financial markets that are even further disconnected from our politics in the United States. So if we focus too much on what's happening here, we may miss something that's going on around the world that actually is having an impact as well. But Josh, kind of just break down a little bit how ultimately this really just is all about your financial plan.
Yeah. And really what I want to point out were two main things out of this is, one, your investment decision, we talk about this all the time, is really driven by your end goals. Is should you make a change? Should not drive around who's in office. Should I make a change? Drives around, did something change within my plan? Did my goals change? Did my situation change? The reason why you should make adjustments is because something dramatically changed within your plan, not from a political standpoint. The second thing is, from the very beginning, compounding, time. That's the most important factor of anything here. Is if I just give the market time, historically, it's been the best place to compound and grow my investments. And so reducing anything that would cause me to change that plan is very important. I need to be aware of what are the factors that I am subject to that may cause me to want to pull money out, even if it's just temporary, which you saw has a huge impact. You went from $30,000 and $50,000 to $1.4 million if you just let it go. And that's huge. And I think getting that point across is time in the market versus timing the market. You're never going to win with timing. Time in the market wins every time. And that's the key to all this is when you look at politics to say, yeah, there's reasons for me to vote for A or B. That's great. But investing should not be one of those reasons, nor should the end result force you to change your investments either.
Well, I think to build on that a little bit more, something that we've seen over the last year or so is record high cash balances.
Oh, yeah.
So people have been scared. You know, we just got out of a bear market recently, but people have been really scared about investing. Inflation's been high. We had a bear market in the stock market, a really bad market in the bond market. People have been scared and stacking up cash. And that's actually been not as bad as it has in the past because you've been able to earn 4 to 5% of your cash, which that's not so bad. But historically speaking, now's the time to get off the sidelines with your cash. And this is not related to this election at all. But for the studying that we've done, we've seen that following peak interest rates, which interest rates probably peaked in the fall of 2023 for the cycle. Following peak interest rates, both stocks and bonds outperform going forward. So what we can take from that is this is not, the election aside, this isn't time to be holding cash. Holding cash is not going to help you fulfill your financial long-term plan. Now, we're not talking about short-term.
No, emergency funds, all that stuff.
Things you need for checking and savings and short-term stuff, that's fine. Cash is great for that. We're talking cash is not an investment, period.
Don't look at it as an investment piece.
Exactly. So any other final thoughts, Josh?
I just remind that everything we talked about isn't saying you're not going to experience volatility this year.
Absolutely.
Election years do tend to have volatility, especially through the summer months when everybody's campaigning and all that stuff. What I am saying is don't let the short-term volatility adjust your long-term goal. Especially if you're not needing the money this summer, just ignore it. Let that volatility play itself out because over the long run, that again, the time is more important. And so elections tend to impact the market in the short term because the market doesn't like uncertainty. And one thing you don't know is the outcome of an election until it happens. But that short-term volatility is irrelevant when you look at those 10-year periods, 15, 20, those long-term periods, those little short-term volatilities, not important.
And looking back at election years in the past, markets have actually averaged positive returns during election years. There's been some bumps in the middle, but positive returns. So that's if history is any indication, which it's no guarantee of future results. Right. We obviously know that, but it doesn't have to be bad. So I totally agree. I just want people to be educated on this. Like, we have our own political opinions, but as long as we don't let those impact the way we are, planning for the future, because again, we're thinking long term. We're long term thinkers here. We're going to be everything's going to be fine. Your financial plan is already set up. To incorporate
if you're following those rules and on track,
like,
as long as you stay on track, you are good.
All right. Well, thanks for listening. Please share this episode. Maybe you had someone talking about being scared about investing in an election year. Hey, share this episode with them. Email us any ideas to hello@theinvesteddads.com. We'd love to hear from you. And until next episode, have a good one.
All right, talk to you later.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.